Hey, what's up, my friend? So in today's video, it's about Forex confirmation, limit versus stop order. So I've got a question from Big Rotten Apple, alright? Do you personally enter your trades with a limit order or wait for a confirmation and use a stop order to enter? So the straightforward answer is yes and no, and let me explain why. So firstly, let's talk about limit order. What is a limit order? So for those of you who are unaware, let me just briefly run through what's a limit order. Let's say the market is in a range, okay, and it bounced off support, and right now it's at this middle of the range. And let's say maybe you want to be buying at support, you want to buy support, but now you have missed the first part of the move. Market has rallied up higher, and you don't want to be entering over here. So what you can do is to put in a buy limit order at support. This means if the price reverses down lower, you would get filled, right, on your trade because it's a buy limit order. You're entering at a cheaper price, at a more favorable price, okay? The downside to using limit order is that you may not get filled because the market may just continue higher and your limit order kind of sits here till, the end of time, okay? So that is pretty much what a limit order is. And the way I use it is that I set limit order on my trades when I miss a trading setup. And at the same time, right, the pattern is still not invalidated. So let me explain to you what I mean by this. So firstly, right, let's have a look at this. Let's say it's a chart of Bitcoin. Let's say, there is this breakdown over here. Okay, the price, it broke down lower. Okay, let's say it's trading over here. And clearly I missed the breakdown at this area of support over here. So what I could do is I could use a limit order, a sell limit order. So what I could do is to put in a sell limit order over here. So if the market, let's say, if it does retrace up higher, let's assume, right, if the market somehow, right, it does retrace up higher, I'm going to get filled on this sell limit order. Okay, we're not going to talk about stop loss and stuff like that because that is irrelevant for now. So you can see this is where I use a sell limit order to get into the trade. If, for example, I missed the first part of the move. So recall earlier I said the limit order would be there until the trading setup is invalidated. So now the question to ask yourself is, at what point would the trade be invalidated? So this really boils down to you, right? Your trading strategy. At what point, right, would you exit the trade? At what point, where, there's no reason for you to stay in the trade any longer. So let's kick things simple. Let's say, for example, for me, this trading setup, let's say the trade will be invalidated if the previous candle breaks and close above the previous candle high. So you can see over here, okay, in this case, this candle over here, right, it broke and close, this candle break and close above the previous candle high. So that could be a form of invalidation for you. Maybe, if that happens, right, then hey, your so-called trailing stop loss is hit, right? So that's a possibility, right, to trail your stop loss using the previous candle high. So let's say, you missed the move, the market hit down lower over here, your sell limit order is over here. So as long as the price did not break and close above the previous candle high, your sell limit order would still be here. Okay, only when the setup is invalidated or only when your trailing stop loss is hit, right? Meaning over this candle, let's assume that you're trailing your stop loss, using the previous candle high. This candle, it break and close above the previous candle high. Only then you remove this sell limit order over here. Okay, until it gets invalidated. However you want to define invalidation for your trading setup. It could be a 20 period moving average. It could be the previous candle high or low. It could be, whatever you wish to. So this is just an example of what I mean by, I'll use a limit order. I'll put it there until the trading setup gets invalidated. Okay, so you can see over here, I remove the order when the setup is invalidated. And how it's invalidated, it's up to you to define it. So what I've shared with you earlier is, trailing a stop loss using the previous candle high or low. You can use the 20 MA, you can use a trend line, it's stuff like that. So also, right, when I use limit order, I don't blindly put limit orders in the market. So for example, let's say, I notice that this is a market is in a range, okay? I won't just blindly park a limit order at this level just because it's an area of support. What I would like to see is like the price comes in first, right? Get a form of price rejection and close higher. Then only then when this move is so-called confirmed, right? Or, there's a valid entry trigger for me to enter the trade. Only then, right, would I want to buy. Okay, so I don't blindly place limit orders on the chart. That's not how I trade. There are traders who do it, who are successful with it, right? But for me, my preference is to always let the market show signs of reversal first and then get on board the move. So that's how I use a limit order. As for stop order, right, let me explain how I do this, right? So for stop order, It's pretty much the opposite. Let's say the market is in a range. Okay, then it starts to consolidate. And you notice that there's this like resistance or consolidation over here. So what you can do is you can place a buy stop order above the high. So if the market trades above the highs, right, automatically you get into the trade. That's what we mean by a buy stop order. Placing an order above a market structure, a reference point, right, where if the price hits that level, you'll automatically be in the trade. So when you use a stop order, right, you're entering your trades with momentum at your back, right? But the downside to this is that it might be a false breakout. Okay, but you're guaranteed, right, to always be part of the move, right, when you use a stop order. Of course, there might be slippages and stuff like that, right, but you will be guaranteed, right, to enter the trade, because the moment the price hits that level, right, it would send an order to the broker or whatever you are trading with, right, to say that you want to be buying right now since the price has already triggered your stop order. So how I do it is, again, right, it's usually for trading breakouts. So when the price is near the breakout level and after a build up is formed, right, and if the price is very near the breakout level, I tend to just put in a stop order over there. Okay. However, if the price is far from the breakout level, I don't have my stop orders at it. So let me explain again what I mean by this. So one example is, let's say, crude oil. Okay, so if you look at crude oil, you can see that over here, okay, notice that this is there is this a trend continuation trade over here, right, like a bull flag over here. And notice, right, when this candle closed, it closed, right, pretty much near the highs, this candle. So there's a good chance, right, the next candle could be a strong big bullish close above this highs over here. And it's not wrong to wait for the close. You can wait for the close to have, a further confirmation, but there's a good chance that the market might close pretty far away from this breakout level, and you would have to enter at even a higher price. So this is when I would, use a buy stop order to just put it just above this highs over here, because there's a good chance that if the market breaks out and if I wait for the close, I'll be entering at a much unfavorable price, a more unfavorable price. So this is where I just use a stop order above the highs, especially after a build up has been formed, right, and it's at this, this key resistance or swing high, however you want to call it. Okay, when I don't use a stop order, right, as mentioned, right, is when the price is far from the breakout level. So again, let me explain what I mean by this. So you can see that, for example, okay, let's see if I can find one. I think this one. Okay, so you can see over here, let's say now the market, right, uptrend, right, consolidate about here. Right now the price is over here. So you can see that from this closing price, okay, from this closing price, which is here, okay, to this breakout level, the distance is pretty large, right? The market, right, needs to move this much all the way up to these highs, right, before the breakout could occur. So usually when I see that the distance is very far away, I won't put a buy stop order above this highs. I want the distance to be near, because when the distance is very far away, what could happen is that the market move too much, it moved too much too soon, hit the highs, and then it reverse down lower and end up being a false break setup. So usually I don't put a stop order, right, when the distance is too far, because if the market moves too fast too soon, right, it tends to exhaust itself and have a sign of reversal. So this is where I don't put a stop order above this highs over here, because the distance from this close to this highs is too far. Whereas you compare earlier, right, to the crude oil one, this one over here, you see the distance is much nearer. This one here, right, the distance of this highs, this closing price to the highs is so much nearer. So this one over here, right, I'll be more inclined to put in a stop order. Okay, because if I wait for a close, right, there's a good chance that it's going to close pretty far away, and I'll be entering at a very unfavorable, or rather a higher price to pay. Okay, so this is what I mean by I don't have stop orders if the price is far from the breakout level. So back to the question, right, where you see a little from Rotten Apple. Okay, do you personally enter trades with limit order or wait for confirmation and use a stop order? My answer is yes and no to both of them, right, as what I've just explained, right, earlier. Okay, so let's do a quick recap, right? So I use a limit order, right, when I miss a trading setup and that setup is not invalidated. So for example, let's say I trade breakouts. I missed the breakout trade. And for my breakout trades, let's say I usually trail it using the previous day low. So for long breakout trades, right, I would hold on to the breakout trades until the price breaks and close below the previous day low. So let's say I missed the trade, okay, and the price has not break and close below the previous day low. I'll put in a buy limit order. So maybe if there's a sudden spike down, I could still get filled on the trade. However, if the market breaks and close below the previous day low, okay, that means my trailing stop loss is hit. That means my trading setup is invalidated and I'll exit the trade. So if that happens, right, and my buy limit order is still not filled, I would remove the buy limit order because now my trade is invalidated. And remember, your trade invalidation, it depends on you, on how you want to classify invalidation. It could be a trailing stop loss, it could be a moving average, it could be a trend line, or maybe it hits your original take profit level, right? That could be ways, right, to define that, hey, your trading setup is invalidated. Okay, so this is what I mean by I use it when I miss a trading setup and the pattern is still not invalidated. For stop order, right, I usually use stop order when the price is near the breakout level and after a build up has been formed. The reason I do it is because when the price is very near the breakout level and there is build up being formed, right, there's a good chance that the breakout could be strong and swift. So if I were to wait for a close, right, I might be entering at a much higher price. So I just have a buy stop order above the highs. So I would get into the trade, right, the moment that price trades at the breakout level or beyond the breakout level. However, I don't do it, right, if the price is far away from the breakout level. Reason being is that if the price is very far from the breakout level and let's say there's a sudden huge spike that breaks out, chances are that breakout tends to fail because the price has moved too fast, too soon, right? And more often than not, it's likely to be a false breakout. And I don't want to be, parking a stop order at that highs only to, have a good chance of it being a false breakout. So I only use a stop order when the price is very near the breakout level and there's a very nice tight build up being formed. Then I'll just put in a stop order over there, right, to get the best possible entry on the breakout. Okay, so this is how I use limit and stop orders. I hope that answers your question, Rotten Apple. And for those of you who still have questions for me, you want me to answer, leave it in the comment section below. I'll read every one of them and I'll do my best to help. And by the way, before you go, right, hit the thumbs up button and subscribe to my YouTube channel. This way, whenever I publish a new training video, right, you'll always be updated and you'll never miss a thing again. All right. So with that said, I wish you good luck and good trading. I'll talk to you soon.